Brian Johnson. I'm a partner at Republic Capital. Taught myself to code in C++. Taught myself to build an Unreal Engine. I was doing a lot. Stuff doesn't repeat, but it does rhyme. Going back to the .com balloon and bust, you can definitely see that. And oddly enough, it takes a few generations. It has to be like that, where you know it works, and you don't have to understand the tech, especially on the retail side, because life is so complicated. We need to move away from this religious sentiment on chains, right? Obviously, some tech is better. And obviously, we're going to be multi-chain, because if you don't want to be one nation, you don't want to be stuck to that chain. Like if you would disagree with the way a certain chain is going, the governance is going, you can move to a new one. So you definitely need multiple chains, but you don't need all these.
Well, super excited to have you here, Brian. We first connected, I think, in Spain, and no, actually, I think New York.
I was thinking about that. I was thinking about when we connected. My memory goes back to Spain, but I think you came to our office before then.
Yeah,
you were just starting Frictionless.
Exactly. Very, very early days. You're one of the few that knew about it, and I think definitely before even the podcast. So one of the true OGs. Yeah. But and I also just wanted to say happy birthday. Your birthday. So
thank you.
Congratulations.
Thank you. I'm 34.
Amazing.
Starting to get wrinkles a little bit. Beyonce is telling me I should go get Botox now, so I'm at that stage.
Oh no. Well, not crypto definitely ages us a little bit.
Yeah. If I go to Korea Blockchain Week, maybe I'll get it there. I heard it's pretty good.
Perfect. Well, yeah. I would love to start the podcast just with a little bit about yourself, what you're doing at Republic, how you got into the blockchain and crypto space, and let's kick it off and start it from there.
Perfect. It's a long story, so I'll try to keep it as brief as possible, just by journey into crypto, I would say. So Brian Johnson, I'm a partner at Republic Capital. We sit under the ecosystem of Republic, which is we started out as an equity crowdfunding platform, republic.com. And so our mission overall, and still is to this day, is to democratize investing, allowing everyday people to invest in startups. But that's not where I sit. I sit on the institutional side. So effectively, if you split us in two, we're the typical, VC side of things, and republic.com is the equity crowdfunding side. On our side, we're a registered investment advisor too, so we have to be separate and have a wall between us. But we're very much like a family, I would say, so to speak. And we didn't start at the same time too, but maybe I'll start on my background a little bit first, and then how I came to Republic.
Perfect.
Funnily enough, my first forte into crypto was in 2009. I actually stumbled upon the Bitcoin white paper.
Wow.
It's not as glamorous as you would think, but I was a sophomore in college. I was a business major, with a entrepreneurship minor, and I remember I was in my dorm, and I was really into reading Hacker News, and funnily enough, all my friends were engineers, because just where we lived on South Campus at Syracuse, and they were, since we hung out, we were always talking about technical stuff, played Mario Kart together and stuff like that, and so just going through the startup news and stuff like that, because obviously entrepreneurship, that was super interesting to me, and stumbled upon it, and regrettably, I skimmed through it, and so I didn't really read it in full. So I got it, and especially with the Great Recession was going on, so had a understanding of it and the need for it, but didn't really, I guess, pull the trigger. I would say you could download the Bitcoin client too, but also I had a Mac, so I couldn't actually run it. And I'm sure if I did, knowing me and just myself at that age, I was a moron. Still am to a degree, but I would say, but I would have definitely lost it all. I would have definitely left it on that computer, forgot the private key. I didn't even know what a private key was at the time, and also like your private key looked like your public key, and it was just like one was just longer than the other, right? So it was, forgot about it, and then funnily enough, stumbled upon it again, but this time on Reddit. I I think it was Reddit or some forum where some guy was doing an auction for 10,000 Bitcoin for, I think it was like $50. He was seeing how much he could get. And I was like, maybe I couldn't mine it, I remember, or run the client, but maybe I could just buy it. And then I was like, how do I know he's not going to just run away with my $50? And then I'll probably have to ask him how to set up a Bitcoin wallet because it was just, it was a lot of just do it on your own, Wild West. Still is a little bit, to actually very much so to a degree in this
Yep.
space. But I just, knowing me and just where I was and just my carelessness, I knew and also I was just, a poor college student. And that $50 was very valuable to me. So granted, that's why I'm not in a yacht right now. But that, after that point, obviously totally forgot about it. And then graduated college and, got a traditional finance job. I was an analyst at a commodity trading advisor. But on the side, with my best friend, we were trying to do, figure out what we want to do and start a company. So we were brainstorming, obviously doing it in the evenings. So it was taking longer than expected to figure out what we wanted to do. And also, we incorporated a company, not incorporated, we set up an LLC. Obviously, I did it wrong. I did it in New Jersey, which was a mistake. But you learn from those, as a startup founder or whatever. We wanted to do something in the app space on the App Store. We had a couple ideas that really didn't pull through, and so we shifted to the gaming side of things. Meanwhile, I'm still, working in traditional finance, and so definitely long hours. It was. I wouldn't do it again, but it was definitely fun to do with your best friend, I would say. Oftentimes, like you fight and stuff like that, and you have disagreements. I started getting more and more into crypto as the years went on, and started saying that, to my buddy, I think this is probably the avenue we should go down. It seems like this is, just the new wave of finance. We came out of college at the same time during, towards like the middle of the Great Recession, and getting jobs in that space was just super difficult. And I was luckily enough to get a job at this commodity trading advisor. Funnily enough, they had their margins at Man Financial, and they got basically, I don't know if you saw in the news or back in, 2013, 2012 or 2013, basically Corzine, huge issue, and basically lost our margins. We got like Mount Goxed, basically.
Oh no!
And
oh no!
So ended up going to a bigger bank, Unicredit. I was working on the supply chain finance side, also the foreign exchange conversion side. We had these proprietary products in house, and definitely saw more and more just the need for crypto when I was, basically doing these conversions from euros to dollars, and also on the supply chain finance side, just how much crypto just could open this up as a whole. And crypto became more and more of a hobby. Also on the gaming side, that was also a hobby with my buddy. We were still trying to figure out a product market fit for just our ideas. We had shifted to VR at the time too, so I taught myself to code in C++, taught myself to build an Unreal Engine. I was doing a lot, really. I was definitely spread too thin, and at the same time being a degen in crypto and just buying up, ETH and Bitcoin, and then selling at the lows, obviously, because I was very risk averse too, and I thought it was over every time it went down. This could go on forever, but long story short, I was like, what am I doing? Obviously, we were too early in VR with my friend in the startup side, but learned so much about the gaming space and just like what works and what doesn't, and how risky it is, and especially if you're an indie game developer. And then, crypto was just being in the traditional banking side, just seeing the opportunity there, and seeing that as a once in a lifetime opportunity, and also knowing a bunch of mentors on my side who came out of the dot-com boom and either sold companies or tried to build a company. And the funny story from that is one of my close friends, and I say close friends, close family friends, sold a company during that time. The pitch was, if you don't buy us, we're going to buy you. And so like all these
Yeah.
Web two, all these not I say Web two, all these non Web two companies were basically like, holy shit, we're gonna miss out. And so they would buy Time Warner buying AOL and so buying XYZ company that were just making no revenue, right? And so like it's all playing out again, and just you could see that. But it obviously the internet had its boom and bust cycle where there was just no revenue, but actually there was the global internet is now massive. It's not a fax machine, like a glorified fax machine, like
Yeah.
Kruger said. Um, and so, long story short, ended up leaving the bank. I got a job at a family office where we were like in the basement of the family office, a high frequency trading firm. We were doing the DGen crypto and cannabis stuff, and also had a security token offering platform called SAF Launch at the time, and then Rengen. It was exciting times. I was working till like 2 a.m. just dealing with users of the platform because we raised for T0 back in the day. I don't know if you remember that. That was Patrick Burns' security token trading exchange. Still around today. I don't know how they're doing, but I haven't tracked them since then. And we raised $100 million. It was crazy. And it was like in a week. And shortly after that, both crypto and cannabis took a dive. And funnily enough, actually, not many people know this, but during that time, I couldn't tell you how many calls, because we also had a venture arm where we invested separate obviously from the platform. You always have these walls, right? And there was at least 10 or more founders that I talked to where they were going to do some, crypto project, you name it. And they also were, and on the side after the call, they were like, and by the way, I know you guys are into cannabis. My other startup is a cannabis oil extraction company based in California. I kid you not, it was like 10 or so calls I had where it ended on that. We also looked at the cannabis side too. But we never pulled the trigger on those because obviously spread too thin.
Yeah.
And
yeah.
And
ultimately, all of this kind of led you to join Republic and like spearhead the efforts there.
Yeah. So, funnily enough, we were actually on the board of Republic, and the family office still is. And it's a multi-family office. So when crypto and cannabis took a dive, they were like, let's pause for now on just the investing side and the platform side, and let's just go back to our main core business. And so I knew how to, operate these SPVs and funds. I knew how to spin up a platform, and knew how to navigate in the crypto space and invest in it. So I joined Republic in 2019. That's when we formed Republic Labs, which is effectively our investment arm. It was called Labs at the time, just to see if we could build the AUM of Republic as a whole, and build out this institutional capital side. And so it was 4 of us at the time. It was myself, Christian, Sullivan, Boris Repson, and Julian John. I wore many hats. All of us wore pretty much every hat on that side. And so I built out the operations side and also our crypto investment thesis. And funnily enough, I say that a lot, but we started out investing in the space, so like aerospace and defense, and a couple small checks here and there on the crypto side because we wanted to build a track record and not just be beholden to one market, because we had expertise in space and also in crypto. We did a couple small checks here and there in some other sectors because of LP interest, but generally building out that track record so we could down the road launch traditional pooled funds on the both traditional side and on the crypto side, and that's what we've done. And since then we've grown to, gosh, I don't even know, 17 or 18 folks on our side. Built out this big operations team. We have several funds underneath our umbrella, and it's been a wild ride. It's Republic as a whole, we're technically, I would say, 3 arms. We have the platform side, which is republic.com for anyone can invest in U.S. startups, and it's through a specifically regulation crowdfunding, which was enabled by the Jobs Act in 2016. And then we have a separate arm, which is Republic Advisory, run by Andrew Durkee and Brian Mint. And effectively, I say it's our crypto merchant bank. It's, you name it, white paper, token economics. We even build a token for you if needed. Help with listing. We have our own token offering platform as well, compliant with KYC and AML. We have also a treasury management solution. We run our own nodes as well. I think we're one of the largest Avalanche nodes, if I'm not mistaken, and run a bunch of other nodes for, you name the L1, we probably run a node for it. So just being this overall ecosystem on the, the retail side, the advisory side, and the institutional side, and trying to be this one-stop shop for private capital.
Amazing. Crazy story.
But
I always find it fascinating. It's hard to kind of make those jumps, and so and especially kind of being with the Republic team since inception, as I'm going through now, just wearing all the different hats that you have to do to bootstrap that and get off the ground. It's not easy, and so applaud you and the team. Just I would say being in the space from like 2019 when you guys started. I mean, ultimately you were in the space prior, but like once you guys like officially started the fund since now, what have been like some of the biggest things that you've learned? I mean, one through like 2017, but also now since the fund's live and being a like capital allocator through this last bull market.
Yeah. Definitely in the venture side of things, you could see that stuff doesn't repeat, but it does rhyme, right? And going back to the .com balloon and bust, and then its surgence after that, you can definitely see that in crypto, especially with the adoption of just any new technology. Oddly enough, it takes a few generations. So the internet took 30 years, give or take, and the cell phone, 30 years, right, for mass adoption. So if you look at crypto, we're 14, 15 years in, we still have, another 14, 15 years to go. I think, it might be shorter given that, the access to information and just us being a globally connected world now in terms of just markets, it might go faster. But on our side, we definitely take the view that, we're still very much in the roads and the tunnels stage of the industry, where the learning curve is still very, very high, too damn high, I'd say. And, the user base, you can see it too. Like, I talked to my little half brother, who's Gen Z, saying like, hey, does crypto interest you at all? And he couldn't give two, can I curse? I was going to say, he couldn't give two shits. So yeah, I'm like, well, if it's not, all my cousins and stuff, all Gen Z, they couldn't care less. And I'm like, well, you're supposed to be the ones that, I'm selling this to. So, why aren't you? But, they're into Roblox and Fortnite and stuff like that. So maybe I'm thinking it's Gen Alpha, and they're probably still learning to talk. So that's why I think, we still got quite a bit more time, but it doesn't mean that we're too early in my mind. There's still massive opportunities for just the infrastructure side of things. And also in the intermediary, basically where we are now, I think another low hanging fruit is the gaming side of things, but not what you see with those. You have to, there's 10,000 NFTs. You have to own one of them to play the game. That game costs $2,000 to play. That to me doesn't make any sense at all. The blockchain side on the tech has to be on the underlayer, where you don't even know that there is a blockchain there, right? Like if you think about just comparables on the internet side of things, like most people, you just knew to put in HTTP, / and you didn't, eventually you just didn't have to put it at all. And you didn't know that it upgraded to HTTPS, right? And so it has to be like that, where you know it works, and you don't have to understand the tech, especially on the retail side, because life is so complicated. So like just knowing like how a ZK works, how a certain L1 has a different consensus than this L1. Just blending that all together, make it easy for the consumer. So definitely we look at a bunch of tech and investments on that side, like what basically enables the next billion users. That's why we love Solana on our side, right? I mean, you can see there's so much pushback on it from the early on when Solana had its run. People saying it's not decentralized enough and just it doesn't fit the core thesis of crypto. But I disagree. It was the most fun to use. It onboarded millions of new users when it launched. The fees were super low, and the tech was there. And the founders, Toli and Raj, I think they're great guys, and just totally coming from Qualcomm, it just makes total sense, and just like the vision, seeing how you can grow a distributed system. If you come from a place like Qualcomm, where they had to scale in terms of these the mobile infrastructure, right? Which is why also like people make fun of the Solana phone, but I think it's a genius idea. Like regardless if it fails or not, I think it's a great bet. How do you get the normies into crypto? You do it with hardware, and hardware that's easy to use and understand, like a phone, right?
Yeah.
And so, I mean, we're still on our side very excited about Solana's future, I would say. And even when Solana had some of its issues, it was growing pains, right? Obviously, everyone was worried, right? And it's normal to be worried about those things when you go through growing pains. But if we have I have one of my best friends works at Solana Labs, so it's like you get messages from them and say like stop worrying, right? And just like it's just this just happens to all tech at the end of the day.
Yeah. I mean, I would definitely echo the sentiments that, I mean, it needs to get to the level of abstraction that most people just can use it without having to really think about it. And I mean,
exactly.
Just like IP addresses, I mean, map to domain names. I mean, you think about how we send crypto even to and from each other today. It's still these long kind of key pairings, and they're not super easy or often very easy to mess up a single kind of key or enter it. And so,
exactly. Sending to the wrong address. Your address looks like it should be the seed phrase. The seed phrase looks like it should be the address. It's like all those little things. We're still very much, if you talk to the devs, not focused on the consumer side. We're focused very much on the technical side still. I would argue too much, but we're getting there. And I think it's just, it's better to, get there step by step than just, run and off to the races. And I think it's just telling just where we are in the space. And it just makes sense from historical adoptions of technology as well, which is why I'm so excited about just the opportunities in space, especially in the bear market. Like we love the bear markets on our side because valuations are down. VCs that were entering the space, investors that were entering the space during the bull market, are maybe sitting on the sidelines more now, and so there's an opportunity to get into deals that have, I would argue, more favorable valuations, and where you can invest in and get an opportunity at allocation, more so than oftentimes you get squeezed out of some deals and you wish you didn't.
Definitely. No, I mean, the past couple of years were definitely crazy. I mean, I think Ethereum really laid the foundation and, I mean, spurred the entire kind of smart contract space. And then it was amazing to kind of watch DeFi summer blossom. Ultimately, that led to NFTs and then kind of this proliferation of different layer ones and how they approach different scaling solutions, and really laying that groundwork for trying to build like the interesting kind of consumer applications to be built on top of it. But like, what from this past cycle, was there anything, I mean, I don't think many of us kind of anticipated the FTX blow up or even with like Luna. What were like some of the biggest kind of learnings that you've had just now going through like a full cycle as like a professional capital allocator?
Yeah. I would say some of the learnings, I mean, probably the biggest learning on the VC side is that not every deal needs to be an investment. There's so many deals out there, just like there's so many fish in the sea, right? You don't need to get into every hot deal. And, every deal that we do has a thesis behind it. And generally, some of those theses don't work out, but more or less, we, put a huge amount of diligence behind every trade that we do. And sometimes the valuation might just be way too high because every tier one under the sun is trying to get into it. And it doesn't necessarily mean it's going to be a great return for LPs, even though it's probably going to be a cornerstone tech in the market. And it's probably going to take a huge amount of market share and just be that needed tech that everyone is going to end up using or might not even know that they're using. And so, it's okay to miss those, I would say. And, we're very cognizant of that. And now it's also why, again, we love bear markets more than the bull markets for investing on our side. And you saw that from the Great Recession where, all the notable VCs or most of the notable VCs came out of that. Andreessen Horowitz, Google Ventures, and all those notable apps that we use today, like WhatsApp, Dropbox, Slack, you name it. It just came out of that down market, and so that's we're very cognizant of that and how just the world tends to rhyme, and I think we're seeing it play out in our industry right now, and so it's very exciting. Another thing that was very eye-opening as well was how many bridge hacks we had.
Yep.
I mean, we had all these centralized failures, but the bridge hacks were a mix of decentralized and centralized failures as well. And what we're looking at now is novel solutions that prevent those, whether it be security or a new type of messaging protocol that makes these hacks more preventable, right? And you're also seeing now too whispers about how AI and blockchain could intersect and help improve security. I haven't seen any deals yet, and I feel like the tech is probably definitely still early, and it's probably going to be a bubble across the whole sector of AI, whether it be on SaaS or social networks and on the decentralized side. But it is super interesting, and it definitely is something we're on the lookout for because everyone has used ChatGPT. There's more users in ChatGPT than there are in crypto. That's for sure.
Definitely.
And so that's another reason why we're still early.
Yep.
But if you see the power that ChatGPT had, it's scary and also exciting. And you definitely can envision a time where we'll have an AI just as like a white hat, like a 24/7 white hat, just monitoring transactions and maybe even fixing bugs, in real time. But I think you'll probably still need a blend of human and AI when it comes to smart contract auditing. If anyone sees anything interesting, I still think it's too early, but you have all these AI meme coins too, which are, there's always
things,
garbage.
There are. I mean, the AI trend. I think ChatGPT definitely kind of kicked it off with all the excitement there, but it's definitely will be one to watch. Going back to like, by the way? It's not a particular area of focus that we're looking at. I mean, I'm really fascinated just by AI in general. I really fell down kind of the autonomous car rabbit hole, following, just working at Tesla, and the different tech stacks there. But no, I try to kind of be an expert at one thing, and I think my brain only has so much capacity for crypto, and if I tried to add AI in there, I think it would explode.
Yeah, it's the same for me. We don't have an AI expert here, so that's why we're still not doing any. But we could have a partner down the road that's an expert in that field.
Definitely. So we've really had this kind of, bull market, a lot of it was like building out infrastructure. We had kind of the composability and DeFi summer kicking off. Then we had like the explosion on the NFT front. Really, it was kind of marketplaces that really kind of stole the show to some sense, and then also on the wallet side. But we were talking really about like how few users are. It's still kind of complex today. On the application front and like products, what are you like uniquely excited about that you think needs to get built?
Yeah, there's a lot. On the one thing that comes to mind off the bat is the institutional side. So we are seeing, on the back end, institutions are still building in the space and still thinking of ways to integrate and offering it to their customers, right? And so there's institutional DeFi products that are coming out, institutional staking products that are coming out. And so the adoption is going to happen on the institutional side, I think, before it happens on the retail side. And you're going to basically have the rails from the institutions offer it to retail to make them feel more comfortable, I think, because the security is just not there. I don't know if you talk to your parents, ask them if they hold any crypto or not. But mine certainly don't, even though I've been in the space forever. And even during the bull market, they don't even ask me where do I buy stuff. They just don't even bother, because they're like, we lose money in the stock market. We definitely don't want to lose it in crypto. Especially since we don't have insurance and the regulations still aren't clear. I don't care what Gary Gensler says. They're definitely not clear. There's a reason why lawyers in this space are not recommending to register or set up shop here, which is a huge issue. I think, it's funny, like Bitcoin arguably was started in the US, ETH was started in the US, Avalanche was started in the US, Solana was started in the US. Everything starts here because that's where the innovation is, and that's where the founders are so hungry and the opportunities are here. But, we're just so scared. We were back in the day when the internet came out, like the US government saw how this was, the internet was the future and created laws that were favorable for startups to launch here. But on the crypto side, it's totally different because they see it as a threat to the dollar, but I would argue it's a complement, especially on the emerging market side as well. Like people want dollars. So what better way to strengthen the dollar than that? And that brings you to the emerging market side too. Like we're definitely investors in that space when it comes to markets like India, Africa, Latin America. There's the biggest use case right now is banking the unbanked, right? That's why also crypto was started as well, is allowing these people to transact and get access to financial products. And it's a huge market. And you see that even in this bear market, the growth is massive in these countries, and products that offer basically converting your local currency to USDC and holding that and be able to transact with that, making remittances much easier as well, not having to use Western Union anymore. There's a huge amount of opportunity there, and there's a huge market to capture, and it is being captured by certain startups. And one interesting one that we've backed is called Fonbank, FONBNK. Basically, they figured out how to turn airtime minutes into crypto and create an AMM around that. So if, say, in most of the world, like you pay basically by the minute, right? You don't pay up front like we do here per month. And so like if you don't use all your minutes, you're kind of stuck with those extra minutes. But here now they created a market for those unused minutes to be able to turn into crypto. So now you have effectively a bank account tied to airtime minutes, and they've been growing massively. And it's the founders based here as well, and so it just goes to show, like we're still very much the hub in this space.
I would say even if the U.S. kind of shoots itself in the foot long or short term, that over the long term they'll kind of self-correct, because just as you said, like they set kind of favorable conditions for the internet. And I mean, look how much like the Silicon Valley and tech space has really contributed to the US.
Yeah, massive amounts of growth and wealth was created here from that, and it can definitely happen again. This is the opportunity is here again in terms of just this brand new market, this new technology that's basically landed on our doorstep, and it's just like, don't kick it out the door, bring it inside.
Definitely.
And another thing too I see is on the adoption side, and interestingly right now, I mean, we're very picky about the gaming side of things, because just from my background, I know how difficult it is to pick the winners in gaming, just from years and years of research, and also just building games, or I would say not games, but MVPs, and just actual mini games of sorts, just to see if they were fun. And on the gaming side, if the blockchain's on the underlayer, I think that's a way that you can get that discoverability factor, where gamers can play the game for free, not even know it's on the blockchain. It's on Xbox or PlayStation or PC, and then they realize, on their account, oh, my NFTs or my gaming assets are worth how much, and then they could basically bridge to, say, the DeFi chain is, that's connected through a certain bridge, or if it's an in-house bridge, and then sell their assets that way. Because gamers right now are still very much anti-crypto and anti-NFTs.
Why do you think that is?
So if you know anything about the gaming space, gamers have always felt like they've been screwed over by the big companies, microtransactions, battle passes, DLCs that cost just as much of the game, but for a tenth of the gameplay time. And so, excuse me, they're very off put by anything new. So they're very conservative, I would say, in that regard, and rightfully so, I think. But they're missing the key point about blockchain tech, and rightfully so. They've seen all these scam projects that have come out, like these PFPs, and they see actually how it costs $2,000. So they're right to be skeptical and right to be mad, right? But they're missing the key point, which is that all it is really is just a fiat off ramp, right, for your game assets now. Because if you talk to any game developer, what's the one thing that they hate building the most? It's the marketplaces. They want to build the game. They don't want to build the marketplace at all. They could give two shits about that. It's why you look at Steam, and if you've had a Steam account for as long as I have, the marketplace hasn't changed. It has not changed. Before, when I was in college, it still looks the same. And I think I'm a Dota player, which I would argue is way better than the league. So that was probably like the biggest red flag for Sam Bankman-Fried, was that he was a league player. But I have just from playing it for so many years, I have like $2,000 worth of Dota assets that I probably shouldn't have bought. Was thinking they would be worth something, but I can only exchange them for Steam bucks, and then only exchange those for other games or battle passes or such. I can't turn that into cash unless I go through like a third party, which is not supported by Steam. I risk of getting my money stolen or my game, my assets stolen. And if Valve finds out that you're selling those, or you sold your account, you could get that account just taken away. You can get just blocked. So they do that for legal reasons as well too, on that side, because they would have to provide tax documents. They would have to provide KYC, AML, and so it's better for them to off-put it to some other third party. But that's why crypto is so great. They don't have to worry about the tax side of things. That they leave it to the user. Then the user goes to another chain, sells their assets, or sells it on the chain that, say, if they have a private chain, say if it's an Avalanche subnet, they could bridge it to the C chain, sell it there, and then the user has to worry about the tax documents. They don't have to worry about the KYC AML. They're like, well, it wasn't sold on our marketplace. It was sold on a third party marketplace. We're fine. And they can still tie in the royalties there and everything. So I think it's just gamers just need to see an actual great game that's built by, whether it's ex AAA guys or a current AAA studio, and just see it work. Because right now, all the big game studios that we're seeing that we've talked to a bunch of them, especially on the advisory side too. Like we have a bunch of clients that are notable game studios. They're still trying to figure it out too, and it's still very much an R&D style market for them. Just seeing what works, because they see the potential and they see how it could be. It eventually is gonna, if they don't do it, someone else is going to eat their lunch. It's just like back in the internet days. If you don't buy us, we're going to buy you. So, that's how I see it.
I do agree. I mean, the gaming space is super interesting just from the fact that, I mean, looking at the metrics, that there's so like low millions of users, and like even the most popular applications, and one game could onboard, I mean, even with Reddit, Reddit kind of using Polygon, bringing a couple million new wallet addresses where people really don't know. And on the gaming side, I mean, one popular game can bring in tens of millions of users into Web3, effectively like doubling it or tripling it.
Yeah, especially if it's an app chain too, and you're just the back end is just creating a wallet address for you. Like you have your Ubisoft login, creates a wallet address tied to your account. That's effectively a new user, right? And if it's an app chain where they control the gas and such, it's very cheap on the operational side for them. So yeah, I think it makes sense. And in this middle period that we're in, it's a great way to onboard new users into crypto and help them learn the space, because the learning curve is just still too damn high, especially on the DeFi side.
Yeah. It is all complex. But on the app chain front, I know you and the Republic team are big fans. Can you share a little bit more about like what's the driving thesis behind app chains, why you're so excited about them, and what you're looking forward to in that space?
Yeah. So on our side, we're very much chain agnostic, but there are some chains that we're more privy to and we're more excited about in terms of just their potential. On the app chain side, it's exciting for us on a consumer standpoint, because it allows sort of better UI and UX, I would say, potential there. Like for instance, Avalanche, and the Avalabs team, they're building out these suite of products that making it effectively easier for the user to come in and understand. Like Core Wallet just released an update where you don't have to change what RPC you're on in order to interact with, say, and approve a transaction. It just knows what RPC you're on, and then Bob's your uncle, you're transacting. On the legal side too, the app chains are interesting because it adds more utility to your token in the form of gas. And that's super beneficial, I think, in terms of just where we are on the regulation side. Adding more utility and not less, it just being a governance token is, I think, not the best route to go forward. It's obviously on the app chain side a higher difficulty to start up, because it's more cash as well, because decentralized systems are expensive for developers. But if you can do it, I think adding that utility to your token on that front is hugely beneficial and helps protect you on the legal side of things. And there's also more flexibility, right, for the developers, and being able to pivot your UI and UX in order to interact with your own chain. And effectively, it's you have more control, I would say, which is sort of like a no thing to say in crypto. But for me, decentralization just means censorship resistant in a nutshell. And you know?
I think,
And so,
the industry as a whole really didn't have the language to be able to communicate a lot of these things until recently. And I'd still say now, like, they're still not like super well understood. And so just being able to have like a common framework to even speak about these things is a massive leap, especially on the decentralization front. But app chains too, like one thing that I've been like super surprised by is just how many people kind of want to mess with the consensus layer and tailor that to their own needs. And so it's been fascinating just talking recently with people in the Avalanche ecosystem, people in Cosmos, and how they're planning to kind of tailor these individual app chains or subnets
yeah.
to their needs.
And if you look at an image, say of like Cosmos, I forget what the URL is, but you can see all them connected. It looks like the internet, right? If you look at an image of the subnets on Avalanche, it looks like the internet. And so you can start kind of just see it being built out, where think of these app chains like a website, right? Where then you could say, go to one website, a financial, internet of sorts, where like your money is just able to go from one website to the next. And it makes it just thinking about that from just a retail user perspective and how it could be so easy and just easier to understand for users as well, I think is where we're going. Also, you can see that just from the composability side of things, like, we didn't do eigenlayer, but I'm actually upset we didn't, because it to me, it's like app chains for ETH, which is super exciting, I think, in terms of just helping with the fragmented liquidity side. If they build out some sort of messaging side where you can basically go from L2 to L2, because right now there's so many L2s in the space where you just get basically overwhelmed by how many there are, and you're just like, which one is going to win? Like, for me, it's on the ZK side, like, if I'm Polygon, I don't view Solana as my competitor. I view all the other ZKs as my competitor, right? And if I'm a new user coming in, I hear Ethereum is the way to go. That's the nation I want to back. What L2 do I choose? I'm just thinking about from my mom's perspective. Like, I tell her, you got to go on Ethereum, but Ethereum's too costly. You got to go on an L2. God forbid if like I'm being held up by like at gunpoint, and they're like, you got to do this, or or Brian dies, I'm dead. Like there's just no way. And so for me, it's like, you see like ZK saying, talking about L3s and such. I feel like there needs to be like this overlay where much like a financial product or a financial advisor, like you kind of pick the parameters and it chooses for you. Like I care more about privacy. I care more about gas fees. My investment sentiment is more risk averse, or I want to be more of a degen. You pick those and it kind of would choose for you. And I think that's probably the way we're going to go, where you don't even know what chain you're on. Generally, if you pick, your home is ETH, or your home is Solana, or your home is Avalanche, or there might even be a layer on top of that where it picks one of the L1 layers for you. Because to me, all these chains are like nations, I feel, because it's not like a web browser. Like you had Netscape, and it was very easy to just switch over to Firefox. Very easy then to switch over to Google Chrome. People have money tied into these ecosystems, and that's why certain chains just don't die, where they've had their chance, right? Billions of dollars locked up in like swap takes 6 minutes. Like, okay, it's time to move along. It's but
I agree.
I give it all power to the community there, but I think we we need to move away from this religious sentiment on chains, right? Obviously, some tech is better, and obviously we're going to be multi-chain, because if you don't want to be one nation, you don't want to be stuck to that chain. Like if you would disagree with the way a certain chain is going and the governance is going, you can move to a new one. So you definitely need multiple chains, but you don't need all these.
Yeah, It's been super interesting to me just talking with a lot of the layer one founders and layer twos and their different ecosystems and the different kind of small technical nuances that and how they manifest themselves from one, a product standpoint, but also a developer standpoint. And they are complex. I don't know. I think eventually kind of how I see it playing out is a majority of users and developers will kind of just coalesce into a specific ecosystem in most part because there's a lot of activity there, but it is hard to say.
You're right about,
I mean,
yeah. No, you're right about that, especially being a developer many years ago on my side, self-taught. Learning C++ was one of the hardest things in life. And I remember when me and my friend were like, maybe we should shift over to Unity because that's more better for mobile games. I was like, oh shit, that's C#. But it's still part of the same family, the C family. I was like, all right, I guess it's fine. I just remember thinking and being so overwhelmed by just a new language that I think about it too in terms of the devs in our space now, how many DSLs we have and all the different EVMs, not VMs. And you have, Solidity obviously is the most popular language now with 300,000 devs on that side. But still, I don't know how often you talk to devs on that side, but still you hear a lot of like, oh, I guess it's as good as we got right now. But that's why also you had the Flock move to Rust is because developers love that language in this space. And you also have, the web, the WASM VMs coming out of the woodwork. I remember talking to one of the early ETH devs, huge Rust fan, and I won't say his name just so he doesn't get any backlash, but not a Solidity fan. And interestingly enough, he thinks the WASM VM is, whether it's 5 or 10 years from now, is going to be the VM that wins. So it's definitely interesting. It makes me curious what projects are going to come out that enable developers to build much easier using
I agree. On that front, what are going forward into 2023? Obviously now we're kind of in a year plus bear market. Things have kind of reset from the builder side, also the valuation side. People are having a little bit more time to think about what works, what doesn't work. What are you looking forward to in kind of the rest of 2023 that gets you excited?
Yeah. Well, one thing I'm really looking forward to is there is this game studio that we invested in, and their game is supposed to launch in Q2. All games get pushed back, so don't take my word for it that it's launching in Q2. But I'm super excited for that game to launch, or for their first game to launch, because they just have a history of launching great games. Like the last game that they made $1 billion in 5 years. And that game was launched 10 years ago. And today, that game still has 2,000 daily active players on Steam alone. And they just know how to launch games, and their team is just stellar. And they basically they tried out every chain you could think of in terms of a test environment for what could handle. They chose Avalanche for the subnet side because it gave them more flexibility. Private meets public, right? They can control the gas, make it feel just like a Web 2 experience and not have the users to worry about their wallet. And they could build a companion app where they could see their game assets, their NFTs, and send it to their C chain wallet if they want to. I play the game. It's so freaking fun. And I think it's just going to be another wave of possibly a couple 100,000 million users, just because of where I know they're launching and the partnerships that they're getting. It'll come out, I think, later this month or early next month on just more on the announcement, and they're sending out some videos and such on their development. But that's one thing I'm excited about. It's obviously a portfolio company, not investment advice. It's just something I'm personally excited about. On the investment side, like in things we're looking at, definitely still, I mean, infrastructure is just a basket word, but like, on the rails and the tunnels that are needed in this space, making retail feel more comfortable onboarding, putting actual cash, actual, hard-earned money into the space and investing in the space, I think is we're still not there. And so, cornerstone tech, I would call it, is like where it kind of blends all the chains together, making it feel just like one cohesive system. Where whether it's like ZK state proofs on the underlayer that is able to see the arbitrage opportunities on a specific DEX or AMM and able to rebalance those pools in real time so that there's no more arbitrage and different slippages. And so it's more fair to the retail user, and it can't be just abstracted by people who have large amounts of capital and MEV bots, right? So stuff like that is very interesting to us. On the ZK Tech side, even hardware, new chips are interesting, right? To handle the compute for ZK. API tech as well, being able to have devs use new API tools that making development of their project much easier. So some stuff is not obvious either, right? Too, and so it'll come across our desk and we'll be like, holy shit, why didn't we think of this? And then we'll do a dive on the the founders and on the tech side, and sometimes we'll lead and sometimes we'll be follow on. But for the most part, I would say infrastructure, and then also security as well. And then you kind of just got to wait for regulations and insurance to come about. So that also adds to the cushion of feeling cozy with retail.
Definitely.
Right.
What do you think
there
about? It's a good question. I mean, definitely on the infrastructure side, I think it was funny, like in the early 90s or late 90s, they spent so much money on infrastructure and just laying kind of the pipes for dial-up, for broadband, that once the .com crash, everybody was like, oh shit, like we way overspent on how much money we spent on the infrastructure side of things. And I think we're all kind of there today with some of blockchains, that the people, because we're nowhere near like kind of the utilization of these like new high throughput blockchains, but they have a lot of bandwidth that they can continue to add. So I'm personally really excited about applications that are able to use more of these high throughput, low latency networks, and like consume more of their bandwidth, like actually scale. I do think, I mean, gaming, on the gaming side, it's interesting just from like the user onboarding perspective. I was also surprised by, I mean, and it kind of makes sense with Electric Capital's report, that 80% or so of new wallets that interacted on chain, their first interaction was an NFT, which is wild.
That is wild.
So
it makes sense too.
Yeah. I mean, the NFT thing, like, personally caught me off guard. I was super excited when DeFi Summer was happening on ETH. But yeah, NFTs kind of came out of left field for me.
Yeah. Did you collect Beanie Babies back in the day? Oh, no. Well, I'm aging myself then. It wasn't that long ago, but it's not like Beanie Babies. And I remember my friend started yelling at me who has a NFT project about it. But I mean, there's obviously more utility to NFTs than Beanie Babies. But it was the idea of scarcity, right? It's like there's only so many blue elephants out there, and that blue elephant could pay for college one day. So it's and that made sense to retail, right? And so that's why they hopped in on that early. You want to own this piece of history, right? And we need more stuff like that just makes sense and clicks for retail. I mean, it's going to be harder for the financial products because we're selling new financial products to the overfinanced in the Western world, right? So
Yeah.
it's about making it easier, safer, not safer, but just as safe, and more efficient than the traditional system that we have. And
Definitely.
we're getting there. We're getting there too, especially, security tokens are around the corner, I feel, especially on our parent co side. It's definitely something that we're focusing on in the private side. One thing, it's definitely too early, but us being big investors on aerospace and defense, there are some space companies that are, experimenting the idea of like how blockchain can be integrated on their side, on the tech side. So like, if we invested in a company that is building a new space station, and they're teetering around the idea of how it can work, and imagine running nodes in space or securing satellite data on the blockchain, or having private chains for certain governments, and definitely still too early, but
lots of things to come.
Every industry is thinking about it though, which
Yeah.
is something to be bullish on.
I agree. I definitely agree. Maybe wrapping up the podcast, I've kind of, originally I started doing the spicy questions, but then got out of the habit of doing
like hot ones?
A little bit. That'd be fun.
Yeah.
Are there any like particular kind of like point of view that you and the team like strongly hold that you just don't believe the market either sees, or that you think it's just wrong on?
Yeah. I think, it's going to make a lot of people angry, but
that's why it's spicy.
I also don't care. If you look at the top charts in crypto, there's too many coins that just should not be there. Obviously, the meme coins are fun, but they have no value at all to the space, and it just really just ends up just draining people's wallets, in my opinion. If you have to be early, and then you're basically someone else's liquidity at the end of the day, if you're just a latecomer. There are also some chains that had their chance, in my opinion. I'm not going to say them just out of respect, but people know who they are, and a swap should not take 6 minutes to swap between a token. I'm sorry, with all the, with Solana just being a blink of an eye, it should not take 6 minutes. I don't care how much into the math you are. Like, no. And like no VC worth their salt is investing in those chains as well. There's certain chains that just like we don't touch. I just don't want to be the first person to come out and say it. Because I feel like, I'm very much on the side of, just like evolution, it'll kind of just get weeded out.
Yeah.
And, tech, the great, but also like the best tech doesn't always win. Like, like JavaScript is like, that's the language of the web. It's not the best language, but it won. So, but it has to work. That's the thing.
It does.
So some of these changes don't work. And also, if you talk to anyone that provides data in the crypto space, all these chains are just fake transactional data. Everyone's saying like, oh, look how many transactions you have. I'm sorry. I know you're spoofing the blockchain. I know that your fees are so low that you can just spoof it, so stop paying attention to transaction data. Stop paying attention to development data. We don't know. Nobody knows. Especially when you have all these app chains. I would say there are some, real folks that are, have their chains in the space that actually are the data is, I would say, close to real, but there are some chains that are definitely spoofing their data. I'm not going to say who, but it's pretty obvious. You know who they are.
Yeah. Well, we can leave it at.
Yeah.
No, it's good. It's good. I like the space he takes. It makes things interesting. But no, really appreciate you coming on the podcast,
my
Brian.
gears. Yeah.
Thank you. Thank you for kind of giving background, all the things that you're interested. How you guys started Republic. Thoughts on how the last bull market went, how you're looking into specific areas of focus, gaming, app chains. Super interesting conversation, and
I always love
happy
talking
birthday.
to you, dude.
Yeah,
Thanks, dude. Yeah, this was a great birthday so far.
Awesome. Well, I hope you have a great birthday dinner. But again, appreciate you coming on the podcast.
My pleasure, dude. Let's get this 10,000 views.
Let's do it. Thanks.
I'll do another one if you get 10,000.
Sounds good.
I don't think it.